Good morning students, this is C. Aditya. Please subscribe to my YouTube channel for more updates relating to the CA final auditing classes. In the last class, we have discussed about the audit report, chapter number 6 of CA final ICA study material. Last class we have discussed in the ICA study material about the audit report, class 1. Today I am going to provide you charts relating to the yesterday discussed chapter. Okay, let's see. See chapter number 6, audit report part 1. See, introduction relating to audit report. See students, when you have gone for an audit, that is when you have went for an audit and the audit is completed, then we should issue an audit report. That is the topic discussed here. After the completion of audit, auditor will issue audit report. Then the audit report which the auditor is providing has a great impact because a large number of stakeholders place reliance on the audit report given by the auditor. See students, when the auditor issues the audit report, large number of stakeholders will place reliance on the financial statements and invest in the company. That is why the auditor should be careful, vigilant and objective in the matter of preparation of this report. See students, when the auditor has entered into the audit and concluded the audit, the auditor will issue the audit report. After the audit report is issued, the auditor report will have a greater impact because the users of the financial statements will see the audit report and invest in the company. So the auditor should be careful, vigilant and objective in the manner of preparation of the financial statements. It is introduction relating to the audit report. Next, standards covered in this topic are SA 700, 701, 705, 706 and the contents of audit reports. Okay, now coming to SA 700, forming an opinion and reporting on the financial statements. See students, auditor has accepted the engagement for conduct of audit. See students, there are two types of financial statements which the auditor should do the audit before the audit engagement. While coming to the audit, the auditor should ask the client that whether the audit should be done on the general purpose financial statements or special purpose financial statements. When coming to the special purpose financial statements, auditor will form an opinion based on the compliance framework, that is whether the financial statements are prepared in accordance with accounting standards. When the financial statements are prepared in accordance with accounting standards, then it is said to be compliance framework. When coming to the general purpose financial statements, when the auditor prepares the financial statements in accordance with accounting standards and as per compliance with applicable laws and regulations, example as per schedule 3, then the auditor will issue true and fair view, that is a fair presentation framework. See students, special purpose framework means the auditor will check compliance framework, that is whether the financial statements are prepared in accordance with applicable accounting standards. But in the case of general purpose financial statements, the auditor will see fair presentation framework, that is whether it has compliance with proper accounting standards and also compliance with applicable laws and regulations. Example, schedule 3 of the Companies Act 2013. Okay, let's, for forming an opinion of as per SA 700, auditor will observe SA 200 overall objective of an audit to obtain, see students, to obtain reasonable assurance that financial statements are free from material misstatements and to express an opinion that financial statements are prepared by management as per applicable financial reporting framework. This is the important sentence. See students, to express an opinion, that is for forming an opinion that financial statements prepared by management as per applicable financial statements, that is applicable financial reporting framework. See, applicable financial reporting framework means compliance framework, fair presentation framework. Compliance framework means it is used in the general purpose financial statements, we use fair presentation framework, but in the case of special purpose financial statements we use a compliance framework. auditor will state that whether compliant with accounting standards and prepared accordingly or not. But in the case of fair presentation framework, that is in the case of general purpose financial statements, auditor will state whether the financial statements are prepared as per accounting standards and compliance with applicable laws and regulations. This is what students, compliance framework and special purpose framework. Now coming to consideration for forming an opinion as per asset 700. In case of compliance framework, for forming an opinion that whether compliance framework, that is whether the financial statements are prepared as per accounting standards, we can see by these 6 points. I think the 6 points, when the 6 points are compliant, we can say that they have compliance framework, that is financial statements are prepared as per accounting standards, and the auditor will give an opinion that financial statements are prepared as per accounting standards by way of opinion. See students, in the case of compliance framework, the auditor will see whether the accounting policies are prepared, that is the accounting policies are adequately disclosed as per accounting standard 1, whether the accounting standards are the accounting policies are disclosed at one place or not. All accounting policies which are applicable for particular financial statements should be disclosed at one place. That is what the auditor should check, that is all accounting policies are adequately disclosed at one place or not, whether accounting policies are consistently with AFRF, whether the accounting policies are changing from year to year or consistently, we have to check, that is the auditor should check whether the accounting estimates are reasonable, that is there should not be high estimate uncertainty in the accounting estimate. That again, next, information presented in the financial statement should be relevant, reliable, comparable and understandable. Okay students, it should be relevant, that is whether the information provided in the financial statements, they should be reliable and relevant, comparable and understandable. Okay students, effect of material transactions and events occurred during the current period are reported adequately in the financial statements or not should be checked by the auditor, and the terminology used you should be appropriate in the financial statements, in the balance sheet, profit and loss account, cash flow statements, notes to accounts and statement of changes in equity, whether the item of the financial statements has been provided with the proper name or not. We have to check whether after the compliance with all these 6 points, we can say that the financial statements are prepared as per accounting standards, and the auditor will provide that the financial statements are prepared in accordance with accounting standards. Okay students, next, fair presentation framework. We have seen above 6 points. The auditor should the auditor should check whether the company has complied with all the above 6 points of the above said, plus it should also check whether the financial statements are overall structure presentation of financial statements are in accordance with applicable financial reporting framework. Then only the auditor will issue true and fair view of the financial statements opinion. What students, in the case of compliance framework, the auditor should check the above 6 points, but in the case of compliance framework, the auditor should check the 6 points plus overall structure, presentation and contents of financial statements also the auditor should check, so that after that the auditor will issue true and fair view of opinion about them. Okay, next, contents of auditor's report. See, first one is title. The auditor should always state in the auditor's report that title, indicating that it is an independent auditor's report. That is, you should be providing that I am providing the independently. So that is why the auditor should state always it is an independent auditor's report. See, second one, address it. To whom it is addressed? In the case of general purpose financial statements, it is addressed to the members of the company. In the case of special purpose financial statements, it is addressed to board of directors of the company. Next, opinion. Basis for opinion. Material uncertainty on going concern. Key audit matters. Emphasis on matters. Other matter paragraph. Other information. Management responsibility. Auditor's responsibility. Reporting on other legal and regulatory requirements. Signature. Place. Date of audit report. UDIN with effect to from 1/7/2019. These all are the contents of auditor's report, which are going to be discussed brief in the next few minutes, students. See students, auditor's opinion, that is the third point. See students, this is what the third point is. See students, auditor's opinion section contains whether the entity audited, that is, if you have audited as the Infosys entity, then that is the entity which has been audited. Entity audited, that is Infosys. Audit has been conducted, that is whether the Infosys company audit has been conducted, we should state in the auditor's opinion paragraph section. Title of each financial statements. Title of each financial statements means balance sheet, profit and loss account, cash flow statements, notes to accounts, statement of changes in equity. Next, summary of notes and significant accounting policies. That is, summary of notes means in the financial statements we are writing notes, then the summary and significant accounting policies which are applicable to the particular financial statement, we should also discuss them in the auditor's opinion section. Next, date and period cover the financial statements. See, balance sheet as at 31st March 2022. We should state like that. We should be providing in these 5 are to be provided in the auditor's opinion section. Next, basis for opinion paragraph. In the case of basis for opinion paragraph, the auditor will specify that we have conducted the audit in accordance with standards on auditing issued under section 143 of the Companies Act 2013, and also we check that make reference to that para in the audit report describing auditor's responsibility. See students, in the basis for opinion paragraph, first we will state that audit is conducted in accordance with standards on auditing. Next, second point we will describe that make reference to, that is for basics for opinion paragraph section, we should make a reference that the description of auditor's opinion, that is auditor's responsibility, that is in the basis for opinion paragraph we should specify, that is we should refer the paragraph relating to the auditor's responsibility. Next, the auditor should specify that you have conducted the audit in accordance with ethical requirements including independence has been complied by the auditor while conducting the audit. While conducting the audit, the auditor should specify that he has complied with ethical requirements issued by the ICAI. Next, auditor should also specify that in the cases of basis for opinion, we believe that the audit evidence obtained by the auditor is sufficient and appropriate to provide for the basis for auditor's opinion. That is what specified in this topic students. In the basis for opinion paragraph, we have to specify these 4 points. Next, SA 705, modification of opinion in the independent auditor's report. See students, in the case of modification of opinion, there are 3 types of opinion given by the auditor, that is modified or qualified opinion, adverse opinion and disclaimer of opinion. Circumstances where auditor issued unmodified or clean or unqualified opinion. In this case, the auditor concludes based on sufficient and appropriate audit evidence that the financial statements are free from material misstatements and the financial statements are prepared as per applicable reporting framework, then the auditor issues unqualified opinion, unmodified opinion or clean opinion. That is, the auditor concludes based on the sufficient and appropriate audit evidence that the financial statements are free from material misstatements and are prepared as per applicable financial reporting framework, then the auditor issues unqualified opinion, unmodified opinion or clean opinion. Circumstances where the auditor issues modified opinion. See, the auditor concludes based on sufficient appropriate audit evidence that the financial statements are not free from material misstatements or auditor is unable to obtain sufficient appropriate audit evidence that the financial statements are not free from material misstatements. That is, auditor is unable to obtain sufficient and appropriate audit evidence to conclude that the financial statements are free from material misstatements. Okay, qualified opinion. See, in the case of qualified opinion students, the auditor concludes based on the sufficient appropriate audit evidence that the financial statements contains misstatements which are material but not pervasive. See students, the auditor concludes based on sufficient and appropriate audit evidence that the financial statements contains misstatements which are material but not pervasive. And the under sentence is, if the auditor unable to obtain sufficient and appropriate audit evidence and concludes, the auditor concludes that the possible effect of undetected misstatements, because the auditor is unable to obtain sufficient and appropriate audit evidence to conclude that there are misstatements, then the auditor will provide them as undetected misstatements, because he is unable to obtain sufficient and appropriate audit evidence. That is why he will say them as undetected misstatements. So if the auditor is unable to obtain sufficient and appropriate audit evidence, auditor concludes that possible effect of undetected misstatements could be material but not pervasive, then the auditor will issue qualified opinion. But if the auditor concludes based on sufficient appropriate audit evidence that the financial statements are material and pervasive, that is, when the auditor is able to obtain sufficient and appropriate audit evidence, then the auditor concludes that the financial statements are material, misstated and pervasive, then the auditor will issue adverse opinion. And in the case of disclaimer of opinion, if the auditor, that is the auditor, is unable to obtain sufficient and appropriate audit evidence and the auditor concludes that the possible effect of undetected misstatements could be both material and pervasive, that is both material and pervasive, when the auditor is unable to obtain sufficient and appropriate audit evidence and the undetected misstatements, possible effect of undetected misstatements could be material and pervasive, then the auditor will issue disclaimer of opinion. Okay students, let's discuss them. See, in opinion paragraph, the auditor will specify qualified opinion in the case of giving qualified opinion, and adverse opinion, that is when the auditor is going to issue adverse opinion in the auditor's opinion paragraph, then he will issue adverse opinion, and disclaimer of opinion in the case he is going to give disclaimer of opinion. See, in the case of adverse opinion, he will specify that no true and fair view will be specified by the auditor in the auditor's opinion section, and in the case of disclaimer of opinion, the auditor does not express an opinion. Okay students, in the cases of basis for opinion paragraph, auditor will specify basis for qualified opinion, basis for adverse opinion and basis for disclaimer of opinion. In this basis for qualified opinion, auditor will specify reasons for giving qualified opinion are provided here, and he will also specify SREs, that is standards on auditing complied by the auditor, make reference to this description of accounting, that is auditor's responsibility and ethical requirements including independence, and also the whether sufficient appropriate audit evidence has been obtained to provide basis for qualified opinion. And here adverse opinion also, auditor will specify adverse opinion. Why the auditor is going to provide basis for adverse opinion, he will specify them here. Again here also we will provide SREs. And in the case of disclaimer of opinion, see students, make attention here. See, in the case of a basis for qualified opinion, he will specify reasons for disclaimer of opinion here, but here he will not specify SREs. Okay, please note, in the SREs he will not specify SREs. Okay, SREs, he will not specify here SREs. Okay, next. See, in case auditor gives a disclaimer of opinion in the auditor's report, he shall not include, that is he shall not include in the basics for disclaimer of opinion paragraph, they shall not refer to auditor's responsibility in the auditor's report, statement that audit evidence for expressing for basis of opinion. These two sentences are not provided in the basis for disclaimer of opinion. Description of audit report. See, make attention here students. In the case of disclaimer of opinion, the SREs will be provided in the auditor's responsibility statement paragraph. That is, we have conducted the audit in accordance with the standards on auditing, we have complied with ethical standards, and we have obtained sufficient appropriate audit evidence, or the auditor is unable to obtain sufficient appropriate audit evidence to provide the audit evidence. So that is why he has giving disclaimer of opinion that will be provided in the auditor's responsibility statements in the case of disclaimer of opinion. See students, see, in some cases what will happen is when the management, that is the auditor, has entered into the audit and the management is going to put limitation on scope. In the case management has put limitation on scope, the auditor will be unable to obtain sufficient and appropriate audit evidence. In such case, the auditor will give qualified opinion or disclaimer of opinion as the case may be. See, in such cases, before giving such a qualified opinion or disclaimer of opinion, the auditor will request the management to remove the limitation on scope. If the management removes, then the auditor shall continue the audit. If the management refuses to remove the limitation on scope, then the auditor will perform alternative audit procedures to obtain sufficient and appropriate audit evidence. If the auditor is unable to obtain sufficient and appropriate audit evidence, then the possible effect of undetected misstatements could be material but not pervasive, then the auditor will issue qualified opinion. But in the case where the auditor is unable to obtain sufficient and appropriate audit evidence, then the possible effect of undetected misstatements in the financial statements could be both material and pervasive, then the auditor will withdraw from the engagement if practicable. Before withdrawal, the auditor will communicate with those charged with governance, or if it is not possible to withdraw from the engagement, then the auditor will give disclaimer of opinion. Okay students, see SA 570, material uncertainty relating to going concern. In the case of going concern, what is meant by going concern? Going concern means the company is continue for future years and make profits of the company. But material uncertainty on going concern means that is the company may not be going to continue in the future, or the company may be going to be liquidated. That is maybe the circumstances. Material uncertainty on going concern paragraph will be provided below the basis for opinion paragraph of the auditor's report. See, auditor concludes based on the sufficient and appropriate audit evidence. See students, auditor concludes based on the sufficient and appropriate audit evidence that going concern accounting is appropriate. Going concern accounting is appropriate. Then the auditor will issue unmodified opinion. See students, auditor concludes based on the sufficient appropriate audit evidence that going concern accounting is appropriate, then the auditor will issue unqualified opinion. But when the auditor concludes that based on the sufficient and appropriate audit evidence that the going concern accounting is material uncertainty, that is material uncertainty relating to going concern exists and it is disclosed in the financial statements, that is the material uncertainty relating to going concern is disclosed in the financial statements, then the auditor will issue unmodified opinion and a material uncertainty relating to going concern paragraph is provided in the auditor's report below the basis for qualified opinion or adverse opinion or disclaimer of opinion paragraph. Okay students, issue unqualified opinion plus material uncertainty on going concern in going concern para in auditor's report. See, in the case where auditor finds that material uncertainty relating to going concern is not disclosed in the financial statements, then the auditor will issue qualified opinion or adverse opinion, and the reasons relating to them are provided in the basis for adverse opinion or basis for disclaimer of opinion. Where in the case of going concern accounting is inappropriate, then the auditor will provide adverse opinion or basis for and matters relating, that is the reasons relating to the adverse opinion are provided basis for adverse opinion. Okay students, next, see SA 701, communicating key audit matters in the independent auditor's report. See students, SA 701, communicating key audit matters in the independent auditor's report. In the case of communicating key audit matters, we have to see the key matter, that is key most important term, that is most significant. What is the term? Most significant. We have to remember this point as most significant. See, all matters which are communicated with those charged with governance, the auditor will select some of them are key matters, that is most significant matters which the auditor's professional judgment. These matters are selected from matters communicated with those charged with governance. See students, see all matters communicated with those charged with governance, but some of the matters communicated with those charged with governance are treated as key audit matters. Those matters which in the auditor's professional judgment were most significant during the audit of financial statements of current period, and they are selected from the matters communicated with those charged with governance. They are considered as key audit matters. Okay. See, out of the matters communicated with those charged with governance, some are considered as key audit matters. Key audit matters is not a substitute. That is, even though you have provided in the key audit matters these four matters, they have to be provided separately. Okay, students. Key audit matter is not a substitute for matters required by management to provide as per AFRF. Matters required by management to provide modification of opinion as per SA 705. Matters providing for material uncertainty on going concern, and separate opinion on individual matters. For these four matters, we have to provide separately in the auditor's report, irrespective of their provided in key audit matter paragraph. That is what discussed here, students. If the above matters are provided in the auditor's report under key audit matters, there are, even though there are provided in the key audit matter paragraph, there are to be separately provided in the auditor's report. Okay, students. Next, what is the purpose of providing these key audit matters? See, it will enhance the communication value of the audit report to the users of financial statements. It will assist the users that these matters are the most significant matters during the audit of financial statements of the current period according to the professional judgment of the auditor. Okay, students. Next, determining key audit matters. See, determining key audit matters means some of the matters which the auditor select from the matters communicated with those charged with governance. For the purpose of determining what are the key audit matters, we should check whether there are compliance with these 3 points or not. Areas of high assessed risk of material misstatements are significant risks identified during SA 315. See students, according to SA 315, the auditor will check areas of high assessed risk are risk assessment procedures. By performing the risk assessment procedures, the auditor will identify assessed risk of material misstatements and significant risk. By having this factor, the auditor can confirm the matters are significant matters. See, significant auditor judgment is required in the matters where management judgment is involved, and including accounting estimate where management judgment is involved, having high estimates uncertainty. See students, significant auditor judgment is required in areas where management judgment is involved, including accounting estimates having high estimate uncertainty. In such case also, the auditor will have more significance that there are considered as key audit matters during the audit of current financial year. See, events or transactions which occur during the year, they are having significant effect. See, events or transactions which occur during the current year which have a significant effect on the audit, they are considered as the key audit matters. Okay, students. See, determining key audit matters. Based on these three factors, the auditor will determine whether the matters are considered to be key audit matters or not, and they will be specified in the key audit matter paragraph. Next, coming to SA 706, emphasis on matter paragraph and other matters in the independent auditor's report. There are, see students, emphasis on matter paragraph. They are considered as users' attention to important matters which are already disclosed in the financial statements and are fundamental to users understanding the financial statements. See, emphasis on matter paragraph will be specifying what matter is. See students, there are important matters which are already disclosed in the financial statements by way of note. So, to bring a better understanding or better presentation are fundamental to user understanding the financial statements, there are provided in the emphasis on matter paragraph. See these students, draw the user attention to important matters which are already discussed, that is already disclosed in the financial statements. These matters, these emphasis on matter paragraph will specify the matters which are already discussed in the financial statements and are fundamental to users understanding the financial statements. Let's discuss them by way of example, students. In the financial statements, some important point is there in the notes to accounts. See students, in the financial statements, some important points is there in notes to accounts. And considering its importance, auditor will tell to shareholders by way of emphasis of matter paragraph in the auditor's report. See students, by way of expressing them in the emphasis on matter paragraph, the user will have special attention and it will be useful for them in making decision for whether to invest in the company or not. So heading on emphasis on matter paragraph will be provided in the below the key audit matter paragraph, where it will be prescribed. Emphasis on matter paragraph will be provided below the key audit matter paragraph in the auditor's report. Clear reference, that is clear reference will be given that the matter provided in the emphasis on matter paragraph has already been provided or disclosed in the financial statement notes to accounts. Where a matter is where a matter which has to be modified. See students, what I should say is a matter which should be modified and the matter is already disclosed which are required to be disclosed as per SA 705 modification of opinion in the independent auditor's report. That matter should not be provided in the key audit matter paragraph. See students, without modification of opinion about that emphasis of matter. See, a matter which is required and are providing that these based on this matter we are going to give modified opinion, then those matters should not be provided in the emphasis on matter paragraph. It is, if it's a modified opinion, then it should be provided for basis for qualified opinion paragraph. It should be without modification of opinion only we should provide it in emphasis on matter paragraph. Other matter paragraph, it is relevant for users understanding of financial statements. It is just relevant for users understanding the financial statements. There is no clear reference in the financial statements. Is other matter paragraph is provided below the emphasis on matter paragraph. Below the emphasis on matter paragraph. Okay students, next example. In case of other auditor has, that is we are the auditor of the central bank and the remaining branches are divisions, subsidiary, associate, joint venture is been audited by the other auditor, then we should provide it in the main audit report that the branches, division, subsidiary are being audited by some other auditor, so that it will indicate the division of responsibility. That is why we should provide them in the other matter paragraph. It is relevant for user understanding financial statements and the no reference is provided in the financial statements. And in the case of auditor, and in the case of main auditor is not the auditor of the, that is the principal auditor is not the auditor of the subsidiary, division, associate, joint venture, then to indicate the division of responsibility the auditor will put other matter paragraph and will specify division of responsibility. Thank you students. Please like, share and subscribe to my channel for more updates relating to CA final auditing chapters, because I am going to provide CA final auditing classes on a regular basis so that the students can be benefit out of this and get exemption in the auditing subject. Thank you students. Please subscribe to my channel once again.